And that brings us to our conversation today about yesterday's, or this morning's morning brief. Did write it yesterday, and just the way the frictions inside the labor market continue to really hamper this recovery. And I think today, let's not worry too much about the ADP data versus the NFP report. We can do the discrepancy conversation between those two another time. But Sazi, the thing that really struck me in thinking about how some economists are still writing about the labor market is there's still this view that the wave of job gains are coming. The math suggests that there just have to be a couple months where we're going to have a couple months in a row, I should note, where we're going to have 1.2, 1.5 million jobs added back to the economy. But when you look at how the labor market recovery has clearly taken shape at this point, we're now 4 months into a period where vaccinations have been widespread. We've seen most states fully reopen over the last few months. Well, they're all reopened now, but over the last few months, we had every state come back online, particularly New York and California, really just the whole Northeast region, which had been a real laggard in easing restrictions. So now anyone can do anything, anywhere, anytime, and yet we're still seeing 500,000 is a nice number. Estimates for the upcoming jobs report are closer to 600 or 700,000, as Emily just outlined, but ultimately, Sazi, I look at stories like what we saw from Southwest yesterday, offering overtime to employees. They got a bailout to not furlough just to make sure that they don't have massive delays or actually cancellations of flights over the holiday weekend. And that to me shows just how choppy it is trying to recall workers, even workers who work for you. And imagine if you've actually gotten rid of your staff, not just furloughed them, but went ahead and fired them. Now you're looking for new talent, and it is just not out there right now.
Yeah, and I think the talent pool that is out there, Myles, they're taking a step back, and I think they are assessing where they want to go to next in their life. Do they go back to a Southwest, or do they go try to work in a different industry that may be paying more and may just be a better overall job than working with the Southwest? But, going back to the ADP, Myles, I mean, look at this note here. I mean, we've lost 19.6 million private sector jobs in March and April of 2020. We've only since recovered about 12.8 million. I mean, there's a huge gap. And to your point, I mean, the street continues to model for these, that eye-popping non-farm payrolls report. I mean, the highest estimate I've seen out there on Friday, consensus at 700,000. Highest estimate I've seen is about 1 million. Many are still looking for this big gain. And I'm just not sure it's going to come because workers are taking their time assessing of how they want to re-enter the labor force. So that big gain may just not be there.
Yeah, and I think look, there's there's also some conversation, and Capital Economics has written about this recently, and maybe it's not the conversation for tomorrow's brief, and I think it's probably something that can wait till next week if it's an evergreen type conversation. But they're estimating that up to 2.5, 3 million workers decided to retire, accelerated retirement plans as a result of the pandemic. And so those folks are not coming back into the workforce. So all of a sudden, maybe by that estimate, the 8 million worker gap now becomes something more like 5 million workers. Then you back in, Sal, to some of those dynamics you're talking about, people taking a step back, people thinking, what do I really want to do? People absolutely holding out for higher wages, not only because we have seen mandated higher wages come into many states, but the going rate for a variety of jobs has gone up in some cases 150, 200% from what it was pre-pandemic. And so I think all of that sets up for a scenario where we continue to have this conversation. I mean, it does feel like Groundhog Day a little bit, Saz, right? Coming into a jobs report saying we've got to have this huge surge in payrolls. There's so many people still unemployed. And yet, as I kind of, finished off this morning's newsletter, I was like, so maybe we're just going to wait for it another month. And then we'll sit here in the first week of August and we'll talk about how the July jobs report, that could be the big one. And it's going to come in, 450, 850,000, whatever it is. And, we'll just do this on and on and on, even as the economy grows at a clip of, GDP is going to be what, 8%, 9% in this current quarter.
Well, I'll be a little tanner when we have the same exact conversation in about a month, Myles. But I'll add this too. We'll talk a little bit later on the show about the earnings from Bed Bath & Beyond and a Constellation Brands. But my sense coming off those quarters and a lot of other tidbits, just talking to executives over the past few weeks, there is a reluctance, I would say, to hire aggressively. I know a lot of the stories are out there saying companies are raising wages and they want to hire aggressively. But I think a lot of them are hesitant, especially those that have really been hurt during the pandemic, to add significant amounts of workers back to their workforce to satisfy the spike in demand they are still living through, only to enter 2022 and demand falls all off a cliff and their fixed costs have gone up because they've added all these workers. So there are many companies, I would think, Myles, that are out there that are in a holding pattern right now with hiring.
Yeah, I think, look, one, that gets to the operating leverage thesis that we've discussed as well, right? Can you drive incremental profits with your current staff? And two, I mean, it still is a generation of executives, let's say, who were, formed in the wake of the financial crisis. And the financial crisis was, get rid of everything that isn't bolted down and really try to manage through a slow return to anything like normal. It's not clear that we are going to see a replay of that, but the initial instinct from so many executives has been to follow a playbook, something along those lines. And I think run it lean and mean is just not going to be anything but the default for executives operating companies today. And we'll see how long that lineage lasts through corporate America, but that's certainly the period that we are still living through today.